Hello guys, welcome back, or welcome to, if you're new, another video. So today I'm going to be going over the correct time frame supply and demand zones to be taking. Nobody asked for it, but I'm just posting it out there because this is something that I had an issue with when I was starting off. I would see a good supply zone on the 1 hour, a good supply zone on the 15 minute, on the 5 minute, and I wouldn't know which one to take. I wouldn't know if I used the smaller one, if I wasn't going to get filled on my entry, or if I used the larger one, I was going to have a smaller risk to reward. And I'm going to break down exactly which ones to be taking and why in this video today. So there are three components that we want to look at when we're looking for our correct time frame entry. We want to be looking at the wick of the supply or demand zone, either if it's top heavy, bottom heavy, depending on demand or supply. We want to look at the liquidity that has been swept prior to the push that the supply or demand zone gave. And we want to see if there's an imbalance either above or below our supply or demand zone. So in this first box, we can see here we have this huge sell side wick on our supply zone candle before we got that bearish push. Now, why is the wick important? Well, the wick indicates that price had extended all the way up to here before it found its selling power, and then pushed all the way down here and immediately carried on upon the next candle open to push all the way to the downside. This is significant because if you see a very strong, very large wick, it's more likely going to suggest that there is a true supply zone higher up in this candle within the wick. So guys, when we look at this wick by itself, it just looks like a normal supply zone candle, and you may want to sell from this candle open right here. However, that is not the case. So when we zoom into this wick that we have over here, what it ends up looking like on a lower time frame is something like this. A very strong bullish move to the upside, and then a very strong sell-off. Okay, now this is where our wick started right here. That would be the candle close, the candle open, and this is roughly where the candle would have closed over here. Okay, so this area, just to be clear, let's draw it out with this horizontal line. Let's just make it a red color. This is this part right here. Okay, so that is our candle close. Now, the reason why this is important is because we can see that price came all the way up here before it started to sell off. So there's no reason for us to be using a supply zone that is this far down when we can see on a lower time frame that this low that gave the last final high was the prior candle on a lower time frame before giving that strong bearish move. Okay, so we can see here that this would be our supply zone. Okay, and again, if I was to draw out what that looks for you guys, how that looks, sorry, it would be something like this. So what we see is, let's say this was the beginning of our candle right here. Okay, let me just remove all of this for you guys. This line now here is at this higher time frame supply zone candle open. Okay, but when we scale down to a lower time frame, we can see that price pulled back here before giving another bullish candle, and then it sold off, which is that red candle right here. Now, what that indicates is this is our wick now here. Okay, so this is our wick, and that is exactly what this box is here. And we can see that we have a supply zone right here on the lower time frame. So that would end up being our supply zone. So for example, we could say that this is on the 5 minute. So this is our supply zone on the 5 minute, and potentially this was our supply zone on the 30 minute. Okay, so we have the 30 minute. Now of course this is not accurate because the amount of candles would not add up to 30, but just for this example, we can see that when we look into this large sell side wick on this supply zone candle, we can see that on a lower time frame we got another pullback before we got the final supply zone that actually gave the bearish push. So that is something that you will see a lot. You'll see a very, very large wick, an abnormally large wick, which firstly is good because it's indicating selling power in a supply zone candle scenario. And secondly, because this is now your true supply zone on the lower time frame before we got that bearish move, okay? So that is the first component that we look at, is wicks, and this is how to identify it. Don't worry, we'll go over some examples later for all three components so you can understand it properly. Now, we are going to go on to liquidities. So, what is the significance of a liquidity purge in order to find the correct time frame for our supply or demand zone? Well, if a liquidity purge is present before we get our sell off or our buy off, for this example, we got our sell off, it indicates that price took out liquidity before giving that bearish move, and that the liquidity purge was the catalyst for that bearish move. So what this means, really, to break it down into simple terms, is that on the lower time frame, price pushed up here, took liquidity, and at which point then could fill its orders to then sell off to the downside. So what we want to look for is a supply zone that was actually above the liquidity purge before giving that bearish move. So we'll show another example now. Alright guys, so when we look at this example now for liquidity purge and finding the correct zone, this is what it's going to look like most of the time in the charts. Now, of course, this may seem a bit confusing, but all this is this is our prior maybe swing or scalp liquidity. It doesn't make a difference. Just this is our liquidity over here, which we are seeking to purge, and this is just price action within the middle, and then this is our lower time frame price action before we got the sell-off. So that is what this is over here. So again, I'll just mark it out for you guys. So this whole box here with our supply zone candle in it on the higher time frame is really just starting from this candle here on a lower time frame. Okay, so this is the start of this candle right here. So we can see that we have our liquidity resting over here. Price on the lower time frame comes up, rally, base. Okay, so we went up, we consolidated on an even lower time frame before we then got a bullish move. Then once we swept this liquidity, we see all of that selling power with that strong bearish candle indicating our new supply zone. So what we want to notice is that this candle here is the start of our higher time frame candle. However, price was still bullish after this candle. Why? Because we got this move, then we got the base, and then we got another rally to break structure to the upside on the lower time frame. So if I was to have my entry here underneath this candle, which is this one right here, it wouldn't be as valid as possible, or you wouldn't have the highest risk to reward return on a trade entering from this candle. We want to see the true candle, which was used as the catalyst for this bearish move. And we can see that after this bullish candle, we swept this liquidity and price then decided to sell off. Okay, price didn't decide to sell off at the start of this candle, because on the lower time frame we continued bullish. Okay, that was only at the point when we purged liquidity, price was then looking to sell. So what does that tell us in this scenario? Well, once we find our liquidity purge, we want to scale down to a lower time frame and find the candle which purged that liquidity before either getting a bearish or bullish move for a supply or a demand zone. And we can see very clearly that it is this candle right here. Okay, so let me just remove this. And again, this would be, for example, our 5-minute supply zone now. This is our new 5-minute supply zone. And on this one over here, it would look something like this. Most likely from the start of the wick that we see here. So this box, again, is this box over here. And let's just draw out what this would have been. Let's say this is our 30-minute supply zone. And that would have been over here. So we can see if we use this 30-minute supply zone candle, we're going to be missing out on some risk to reward, because that is where the start of this lower time frame candle is, and we know that that isn't the significant candle that gave us the bearish move. So we can get rid of that, and then we can find that this was the candle that gave us the bearish move, and we can use that now as our new supply zone to enter off of. Okay, hopefully you guys understood that one. Again, we're going to go through some examples on the live charts later on. So we've gone over the wick of the supply or demand zone candle, and we've gone over a liquidity purge and how that is useful in our analysis. Now the final thing to note is imbalance, okay, that we can see over here. So what is the significance of imbalance in our supply or demand zone entry choices? Well, Imbalances will signify where the market is going to fill and draw towards. Imbalance is also known as fair value gap, as most of you will already know, and it just indicates that there was institutional involvement where price was selling off so quickly or buying so quickly that there was no fair value and price couldn't retrace to fill in any orders that were placed at that current time. So for this example, if that was a bit confusing, there was institutional involvement where price had sold off so quickly with so many orders that we couldn't come back to fill all of this imbalance, and we kept selling off because of the large selling pressure produced by these banks or these institutions. Firstly, let's label this as our imbalance so you guys can see clearly. Now that we have identified that there is an imbalance underneath our zone, which we should be looking for with every supply demand zone candle anyway, what can we then do with this information to find the best supply or demand zone candle? Well, we want to see if there's still more imbalance on the lower time frame, okay? So let's look on the lower time frame for this example. All right, guys, so this is now the lower time frame. So let's label this as our 30-minute, and let's say that this is our 5-minute, okay? Over here. So this is usually what it will look like on the lower time frame when you see a higher time frame supply zone candle with an imbalance underneath. It's going to look something like this. So imbalances, or fair value gaps, or however you want to call them, commonly known also as the market magnets. Why is this? Well, because price will draw towards imbalances and fair value gaps because they need to be filled, okay? So we are looking for price to come back into an imbalance, mitigate our supply or demand zone, and then go into our direction, okay? So we can clearly see here that this is our supply zone candle on the lower time frame, but which is within the higher time frame candle. Now, this is firstly, based off the knowledge that we've just learned, is the supply zone candle that we would want to sell off, okay? But why would we want to do that? So let's ignore the wick and ignore any liquidity purges, so the first two components that we talked about, and let's say that this is just a very valid zone that we could have sold off on the higher time frame, and we're looking for a reason to sell it off on the lower time frame. Well, we can see that on the higher time frame we have imbalance here, so we firstly know that this is a very valid zone. However, we can see on the lower time frame that we have a good supply zone candle here as well. So which one do I sell off of in order to get filled on my entry? Well, that's where you have to look for lower time frame imbalances as well. If we can see an imbalance on the lower time frame, then we know that price will also draw towards that imbalance and fill us in on the lower time frame candle. So again, just to be clear, this box here is just this candle over here on the lower time frame. Hopefully that was clear to you guys. So we can see underneath our supply zone candle here, we want to be selling off of here because we've basically doubled our risk to reward, right? Because we're now halfway up this supply zone, higher time frame supply zone candle on the lower time frame. And we're thinking, oh, we have a great entry, let's go. But what if we don't get filled? Well, here's how you know if you will or won't get filled. We can now identify that underneath this candle, we have an area of imbalance, right? So if I remove this to see clearly, this is more imbalance on the lower time frame, and this will look most likely like this over here, okay? This will be roughly around this area is where we have imbalance. So we now know that this is valid to be selling off of. Why? Well, because we spoke about how imbalances are market magnets and price will draw towards this area. So most likely we will see price come up. Eventually it would have filled this higher time frame imbalance over here that we can see all the way up to the start of this box. However, we know on the lower time frame, price will keep pushing up because we found this imbalance on the lower time frame. So we'll get something like this. Boom, we'll mitigate our entry, fill in this imbalance, and then we'll start to see that sell-off that we've been looking for, okay? Very, very simple. And so now, how can we also use this to decide if we need to take the higher time frame supply zone? Well, it will look something like this. We won't have an imbalance presence. We won't have an imbalance present, and it will look like this. So we can see now, we can see now that there is no imbalance present. Okay, there is no gap between these two wicks at all. Now, granted, we have this imbalance over here, between this one and this one. But now let's just say that that is also not present. So at which point let's have this. Let's say we've got a wick all the way up here. Now this would invalidate the lower time frame supply zone candle because it's already been mitigated. So most likely price will come up here. So it will look like this. Price will come up here, then fill this imbalance, then sell off. And on the lower time frame, what that will look like is, because this has already been filled in, on the higher time frame, the imbalance only goes up to the start of this box, which is the start of this candle on the lower time frame. So it will only come up here and we won't get filled on our entry because there is no imbalance here for price to draw towards and fill. So if we wanted to sell off here, although we may be trying to get a higher risk to reward, we most likely won't get filled on our trade, okay? So instead we want to go with this one, stops above the candle, targets in somewhere significant. And that is then when you would want to choose the higher time frame supply zone candle, okay? This may be quite a long video, but now that you are familiar with all of these components that we're looking for in order to choose the correct supply zone, let's take a look at an example which was actually also called out in my Discord, and let's see how it played out and how we would have identified our candle based on these three components that we see here. So guys, on the 1 hour time frame in this example, we can see that we have this strong supply zone candle on the 1 hour with imbalance underneath that gave a change of character to the downside and also swept liquidity simultaneously. So we're thinking, okay, this looks like a great supply zone to be selling off of, right? And this also, we can notice a lot of things with this example. So let's look at component number one that we spoke about, which is a wick. We can see that this has a very, very large wick. And all this means is that on a lower time frame, we actually sold off higher up in this candle rather than all the way down here. Now we want to look at component number two, which is our liquidity purge. Our liquidity purge also happened very high up within this candle. It could be a candle or it could be the wick, but regardless, it happened far higher up in this candle than where the candle actually opens. And finally, we want to look at imbalances, which we will go on to the lower time frame to do so. So price is coming towards our entry here and we are about to get filled, but we need to choose the correct supply zone candle. So we can see on the 15 minute, we also have a supply zone candle, okay? So we have this 1 hour that we see here. We have this 15 minute, and let's see if we have any other supply zone candles. Well, we have this 5 minute supply zone candle, okay? So there are three very valid supply zone candles that we can be choosing from. So now we're kind of stuck on which one to go for. So let's break it down. So firstly, our first confluence is we spoke about the wick, okay? So this 1 hour supply zone candle has a very, very large wick. So now we want to see on a lower time frame if that is because we actually sold off from a different area, and we can see that that is true. So just like in the example, guys, let's rewind it over here. We can see that our high time frame candle started from here, but that wasn't where price started selling off from. That was just the open of the higher time frame candle. In reality, we got this rally, we got this base, and we got this rally, at which point price was still bullish from this area, because we can see we made a high, we made a low, and we made a higher high on the lower time frame, which indicates that this is not the area where price wants to be selling from. Rather, it was at the final candle before we then started selling off. Okay, so that is indicator number one, that we want to take this lower time frame candle. So based on component number one, we are choosing supply zone on the 5 minute. So now let's see component number two, if that changes our bias. Well, we can already see from right here, component number two is a liquidity purge. We can see that we purge liquidity all the way up here, okay? So again, we go down to the lower time frame on the 5 minute. We can see that that liquidity purge was the catalyst to sell off price. How do we know? Well, because this is the same candle that purged liquidity, and then it's the same candle that gave the bearish move, okay? This is the prior bullish candle before the bearish move. So our component number two has also confirmed that we want to be using our 5 minute supply zone candle. So now we want to look at the last one, which is imbalance. Now on the 1 hour, we know that we have this imbalance underneath here, okay? We can see this one right here. extend this so you guys can see it a bit better. So we have this imbalance over here which needs to be filled. So great, the 1 hour is definitely a good supply zone. So now let's see if the lower time frames also have an imbalance that needs to be filled. Okay, cool. So we can now identify that the 15-minute also has an imbalance that we can see here. So the 15-minute is valid because price will come up, draw into this area, fill us in on our trade, and then sell off because it wants to draw towards the imbalance. So now let's see if the 5-minute also has an imbalance. Okay, cool. So the 5-minute also has an imbalance within the 15-minute candle. Okay, so we can see it here. So this is our 15-minute candle, and we have this imbalance resting under the 5-minute candle. So although it's within the 15 and it's not directly underneath the 5-minute, it is still valid because it's within the 15, so price will then seek for the next supply zone because it's already entered on the 15 and now filling in an imbalance within that 15-minute candle. So component number 3 is also telling us to use the 5-minute supply zone candle. So now that we have found the valid one, even though all 3 of them were technically valid, we've now found the best entry possible, and we're going to see how this plays out. Okay, so we want to set our entry on the 5-minute candle. Just go for a 4 risk to reward. Right, so now we want to get filled in our trade. We know this is valid because we firstly found that within the wick we have a lower time frame supply zone candle. We found a candle that purged liquidity and then used that liquidity to then sell off. And then we found areas of imbalance underneath our lower time frame supply zone. So boom, we get filled in the trade here. Okay. Price is coming down, retests, and there we go. There is our profit. Perfect. Now, as I said, I actually did call this on my Discord, so it's not a lie. You can see that this was called out prior to the entry. And this was using the 5-minute supply zone candle. And price actually sold off completely. Price went all the way down here. It was like a 9 risk to reward or something. Really, really good trade. And I hope that you guys can now understand which supply and demand zones you should and need to be using in order to either get the best risk to reward or just to get filled in the trade anyway at the best risk to reward. So I hope that that was really clear for you guys, and I hope that it also helped, and maybe you can start implementing this within your strategy and within your biases whenever you have an issue where you can see multiple time frame zones are presented, and this will really help narrow it down. Of course, it's not going to work 100% of the time, just like any trade doesn't work 100% of the time. However, it has definitely benefited my trading over my career, and I notice a huge difference when I implement these 3 components into my decision making and my biases when I have this problem of multi-time frame supply and demand zone candles. So guys, again, if this was informational, I am giving it away for free and spending my time on my weekend. So if you could just drop a like and potentially subscribe to see more videos like this that may help you when you're trading, then that would be great and help me out a lot. And I will see you guys in the next video.